Hello, everyone, my dear and my fans. Today is May 12th, Tuesday. This is Sam Wong. I'm just going to tell you this time I'm going to do a little differently, and I hope you are doing well and really enjoying the ride and the momentum that the index have actually drive all times high. Although in Tuesday it was flipped a little bit, which is not really not surprising, but it was still very healthy. I just want you, for those of you who have been paying attention to stock movements, listening to news, what happened to semiconductor and AI, you probably have a really good idea that what information was showing on the screen is not surprising. However, I just still want to capture that to your attention, let you understanding that for those of you who actually hold the stocks, especially the one highlighted in blue, congratulations for a long time. You should be really benefit from this return and you should be very happy about it. But whether it is will be continue the momentum is really important for you to keep pay attention, especially now that you may have heard about a new virus that going on with the ship that actually have to a couple of people die because of that. So although medical experts saying this is different than coronavirus, but it's still very important to really start to pay attention to it. I will get into a little more detail, and there's all this stuff at the end of the day you find is integrated and all interrelated, and really economics, the war and the news and geopolitical risks and how media elections and inflations all kind of come into play on how it's going to make changes incorporated into potentially what's going to happen in the market. So I just want to make it clear that back to 2020 or even earlier than when I started my video, I didn't really telling people to buy index, and really it was actually doing pretty good. If you can see, if you would have be really in a safe havens, which you more secure yourself to buy these three major index: Dow Jones Industrial Average, S&P 500, and Nasdaq. It really give you pretty good return, right? As you can to see, November 2020 versus now as a Monday of 2026 in May, that's really give you like 5.5 years, right? To give you that. Just realize this is a accumulated return. So if you want to do an average, you just divide by 5.5 years or how many months they give you. What is the average return? Okay. So what was the kind of happening was AMC, which if for those of you who remember what happened is that the market actually had been very distressed because of the virus and really people were locked in, right? So the index actually have been dropping pretty poorly if you went back to look at that, and a lot of the what impacted most is really tourism, right? Anything related to that, which is gambling, casino, hotels, and also trip, which is managing where you stay and really planning, and airlines. Okay, so you can see this really statistic. You kind of get a favor of trip, what happened to the stock price at the time, and also United Airline, which really get beat up only $35. Okay, and of course, as of Monday, United Airline is $97, which actually the previous week was even over, still have $100 plus, and then all-time high is about close to $120. Just to give you an idea. So what happened then is there will be a GameStop for those of you who have heard about the name. So you probably remember that. The people just keep gambling, betting on these stocks that actually were in the financial distress. So AMC was one of them. You will remember that Netflix and other competitions that get you really these theater really in a bad spot, and especially when you get locked down, nobody can watch theater, right? So really the stock price has been hammered really, really poorly. So there were times you would bought around the time I recommended. If you look at the trend, actually would have made money and gone up, but really good for short term, because now you look back, if you would have hold the stock AMC at the time until this point, you actually would have a loss of 42%. Okay, and then we'll go back to Chinese stock as well, which is JD.com, which is one of those by PDD, Pinduoduo, which is this one right here, which is the Chinese trading, basically retail sales company that do a lot of transaction, people buying online, and then they have talked about a lot of potential growth back then. Unfortunately, if you really realizing the U.S. Chinese economy, what's going on after COVID, and you have been putting up, and then recently haven't been doing very well. So the stock actually also have negative return if you have the holding from the point of 2020 till this point. Okay. And then XPEV, I'll go into Ligand's XPV in a little bit later. So also you will also realize, I mean, there are a couple of stock in this list is kind of flat, which is DT. Um, ByteDance is a really kind of technology space, but not quite. They're actually not doing very well. But look at Apple; they're really doing pretty well. At the time you bought it at 118, it give you $292 as a Monday, so 148% return. So what is actually the highlight the blue one? I just want to go very quickly. AMD, uh, Nvidia, NVDA, which are going to announce earnings on May 20th, TER and TSM. Okay. And then also you can put Google, but not really exactly directly related. So these are really semiconductor kind of making the chips company. They are doing exceptionally well. If you have bought the stock and you're holding with that, especially in Nvidia, you can tell that you get 1,000% of return. Okay, which means the stock will grow 10 times plus, right, in 5.5 years. And the other stock follow, which actually give you pretty good return on AMD 449. And then the ACLS, I mean, it doesn't give you too much, but it's still over 100% return in a very short period of time. Last year, basically until this year, okay? But all this you have to focus is all semiconductor stock, okay? So now, with that saying, what are we thinking about semiconductor? You probably have to go back and pull back the news, and we'll hear back in about January, February timeline, which is the first quarter earnings seasons that pop up about semiconductor. The stock actually have been pushing back, and you can see the video here, the graph. It actually kind of go up at the time, okay? But unfortunately, once the earnings announcement happening, you can see actually quite it's dipping down, dip down. In fact, it go down to $178, okay? Then in a range after that time to between when you start the earnings season again, if you hold a start, I mean, obviously there's movement on a daily basis. That's why people do day trade. You wouldn't really earn much at all, right? Because this is like down here actually lower than the lower point, and then you go back up, just really telling you it's probably plus minus 5%, which is not in my objective of how I taught you to trade and taking the profit right only 20% plus, okay? But then in very short time, like around pretty much April or less, end of April, it start to really pushing up now. So if you pay attention to my video, you can went back to testify and listen to those video, and I was told kind of tell you to buy the video around $178 range, but unfortunately you do have to hold quite a bit of time, and then you really gone back up now to $220. So the return wasn't that bad in a short period of time, but again, in the long range, if you were hold for so long, 5.5 years, I'm really congratulations to you that you will really have a 10 times return or so, which is not lying to you. These numbers really speak of itself, okay? Now, with the semiconductor continue, my impression was what happened did they tell you in the first quarter? You probably play similar news again, right? So you were saying yes, we have a shortage. We are in AI data center. You need a lot of chips. Why not, right? And you push the stop go up, but again, remember Wall Street and the stock market is really looking forward. So you're all kind of pricey in a stock that pushing up very quickly in such a short period of time. So at the time the announcement came up, they're always going to come back with, even with the good earning announcement or forecast, for example, you really can come back and say, okay, well, we're not sure if AI really need that many, really going to succeed. The expenditure were way too much. It's really, basically all these big player buying this the chips or wherever business with themselves. So you don't know that, right? And then you drop the stock down. So this time, would they play back around similar? I think I would say the stock will pull back before you put it pull higher. Let me put it that way. Okay, so then you can look at opportunity to buy if you do pull back about 10% or so, which is not surprising. And then the other stock again, JP Morgan also do pretty well. It's $105, 300, 184%. Even the hotel, I just picked one at a time. I talk about MGM. I like about MGM, and you can look at CISA as well. I mean, the stock actually did come back up after COVID and recover, but NCLH wasn't actually doing very well. It was actually 17 bucks and just like still around 17 bucks. So you wouldn't make money if you would do that. And I think CCL, you make a little bit percentage less than 10% return. So, I mean, it's still positive. I mean, that's the good news, okay? So, and the bowling is actually doing quite well too, over 50%, okay? So, all I want to show it to you is, okay, what was the history if you hold the stock versus you could have short term, you could have short term take a 20% profit and sell and buy back, okay? And helium in this list I didn't show because back then it was like $23, and of course you if you pay attention to the stock, you keep dropping, dropping, dropping. You're pretty much around three $2 and then between the dollar and $2, that's the time I really push it very hard for helium and ask people to buy it. So if you look at the stock market as of Monday, the stock actually pretty well in $2.70. In the last video, I told people to buy a $1.78 range. So if you wouldn't sold it, I think, I mean, right now it's really over 50% return, then you're probably good to take a profit really short term. Not too bad. In United Airlines, I still look at opportunity, even though the oil prices going, I mean, jet fuel prices gone up. They also have to protect the margin, which they will increase the surcharge, called fuel surcharge. So yeah, there's still people demand and still they travel in summer season. So honestly, if the stock pull back further with the new virus, I really will say it is United Airlines, American Airlines, something you consider to buy. Okay. The other thing also notice in this lag or timeline is the retail business, the retail stock is still lagging. But I do want to point out that, for example, Starbucks, actually the CEO came up saying they were changing, republishing the image style, whatever not. I went to the Starbucks at the time after the announcement one time. I think yes, it did change, the cultural change, and things did do it. You can kind of feel it, but I would challenge the CEO. Did you actually ask your customers that what they want? I actually didn't feel that was better. And I felt maybe that he got a feedback. So what happened was last week I went back to the Starbucks close by. I felt like they went back to the old way. Regardless, Starbucks stock was at the time the CEO stepped in, which is at the worst time of the stock period, is $78, jump up to $105, really less than 6 months. So what happened, I'm trying to say is, right now there's sometimes there's a lot of money on the sideline and wherever in Big Seven, when Mega Seven went out. But there will be a rotational move and shifting the money. And right now retail is still kind of lagging. So when you shift, you can go to the retail business if the reporting PPI and all this good stuff is still showing that consumer still have very strong desire to buy these called discretionary spending, okay, which meaning extra money that you don't have to spend but you do want to spend for enjoyment whatnot. So Nike I see is an opportunity. Adidas because of World Cup I see the opportunity that's actually from $200 if you look at trend and drop it all the way back to 40 last year. So you see the opportunity there to rise. I did talk about Under Armour, which actually did raise quite a bit. And all this retail stuff is really in good thinking of if it's good. Obviously, Costco have been very strong, Target been strong, Walmart has still been strong under the retail piece of it, which is one of the more gigantic, space in terms of those stocks. I hope the stock market will continue to momentum to push further up. Basically, it could potentially S&P 500 can, I mean, they really potentially go higher than, which is QQQ will be 7,600. I mean, today is flip a little bit in the morning, and I still think Dow Jones. This one hasn't hit the record high yet, which is 52,000. So there's a potential. So when Dow Jones can hit 52,000. I think there's a time kind of think through it to look at the portfolio and say, hey, is this really bullish enough? And that probably will lead to the end of the really earnings season reporting. You may consider to pull back some of the stock and take some profit.